It's March 27th, and this is the video log that takes 30,000 to a million. Today is a Wednesday, and I'm recording this in the afternoon. After markets are still open, so Robinhood will be white. It's a white screen. I will take you through some of the changes that have happened in the last couple of days. I didn't make a log yesterday, so this one hopefully makes up for it a little bit. After I take you through some of the events, we're going to talk about why you shouldn't be trading, or me, or the vast majority of people, really. Okay, so let's go into the browser here. And so I'm sitting at 54,281 at the moment. The biggest movers today were Apple, which gave me $170 worth of appreciation. EXK was down 44. Spotify down 41. I did have a successful trade on Spotify though. Russian market is down $71. Big loser there. We have a big hit at URAL down minus 33. So I think I had C-SPAN. Yeah, C-SPAN is up $61 almost. So that's as far as the stock goes. I have two option plays happening right now, two call credits, Preds, and I'm winning on both of them. If we go to Spotify, you'll see how I have virtually decreased my liability to $10, not quite zero, but I've got $140 up on this trade so far. Now, that's 93%. I tried to exit the trade, but it just wouldn't feel. There are just not enough people on the other side wanting to buy or sell these contracts. So I may have to wait until expiration on Friday, until I collect this last $10 here. I've been trying to exit. I got all the winnings yesterday just from one day worth of action, but I can't exit it because there's just not enough liquidity, and it's hard sometimes trading these illiquid instruments. It gives you quite a bit of reward because the numbers really work in your way, but then you're dealing with the risk of like what I'm stuck with now, not being able to exit the trade. So if Spotify goes up to over 146 by the end of the week, I could have exited this and collected my winnings, but now it could end up being a losing trade. So I'm just gonna have to be patient and wait and see what happens by Friday. That's pretty much the big news. Nothing else exciting happening. I'm still looking for good option plays. These are two ones I've done, and they're kind of a little too risky for me even. So hopefully I don't learn the wrong lessons from this and keep doing trades like these because they're a little too above my risk tolerance. I'm betting basically $1,000 that I'm right, and I'm only getting 115 return with quite a bit of risk. So let's move on and talk about why we shouldn't be trading. So I was listening to this interview with this long-time investment guy, and he just threw some statistics. One of them I talked about last time, which is on any given year, 90% of the traders, even professional investors or retail traders and investors, do not beat the market. So only 10% do per year. And if we extend that, if we over a 30-year period, only 1% of people actually do better than the market when managing money. So that means that's a really, really slim chance, right? You have to be a super master. You got to be better than 99 other people, not just 9 with your trades. You have to be better than 99 other people. And it's really low probability. So if you are just now starting to look at investment and trading, what are the chances that you're going to do better than 99 other people, other participants in the market? It's not very likely, right? I mean, if I'm starting a sport and I'm just now jumping into it and I've had maybe like a few lessons, it's not very likely that I'm going to outcompete 99 other people, that I'm going to be in the top 1% right off the bat. I mean, unless I'm LeBron James, I'm not going to be, crushing 99 other people out of 100 in any other sport besides basketball. So we have to shed a little bit of realism. And so basically what that means is that 99 out of 100 of you guys, participants in the market, trading right now, and me included, will lose out to the market. We'll lose out to each other and the market. It's a pretty daunting thought, right? It's like saying that how good would you have to be in order to just do better than investing in an index fund of the S&P 500. So, I mean, I'm not a financial advisor, and you know, obviously you can do whatever you want, and you shouldn't listen to random guys on YouTube to begin with. But I just uh, I just quickly researched some indexes that you can just buy and forget that you even own, and come back to it in 30 years, and you'll be a millionaire. So let's go back to the browser here, and I just found this website. It just ranks them by expense ratio. So a fund that really piqued my interest was this one, SCHX. It's a Charles Schwab U.S. large cap ETF, exchange traded fund. So if we look at it, SCHX, CHX, it's it's priced at $66.9 right now. The dividend is 1.9, and it just it tells you over here, it tracks market cap weighted index of the 750 largest US companies. And what I like about these indexes is that they tend to include add in winners and exclude losers over time. So you never have to really do any management. You don't have to get rid of your losing positions. And as times change and new companies come into the mix and they start doing better than older companies that are out of favor, that have bad management, bad products, outdated infrastructure systems, and just part of an older economy, they get, as their market cap decreases, they get automatically eliminated out of this index. So that's how all indexes work. And they're basically doing all the work for you. I think it's a really, probably, the safest way to gain money over time. So if you put a bunch of money into this index, like, you'll be doing better than 99, roughly 98, 99 people out there over 30 years. So it's worth considering. It's worth thinking about swallowing your ego, and something that I don't want to do and nobody wants to do. But it's worth, if you're, percentage based guy, if you're a logical thinker, it's worth considering that you're just not going to do better than the market, and just dump all your money into an instrument like that, and keep adding to it over time, whether it's in your retirement accounts or just your retail account. um, I think you should, everyone should consider that at some options, and think about how good they have to be in order to beat this index. That's kind of what I want to talk about today. I want to shed some light on how improbable it is for anyone to beat the market, and how much skill and how much knowledge and experience it takes to do it. And that's why, Warren Buffett is such a extraordinary guy, because he's been able to do that along with a few other guys, and basically they're famous now because the probabilities are so low for them to do it over 30 years. And there's this guy, I think Druckenmiller or something like that, uh, that has also done a similar feat over a long period of time. But even now, he's starting to have bad years where he's not able to beat the market, right? I think 2018 or something like that, and he's having a rough time. But I guess he's somewhat retired now, but still, um, it just goes to show you that even those people fall out of the 1%. As the time frame increases, it's less and less likely that you'll be able to beat the market. And so, the Warren Buffetts of the world is just one person, right? There's only one guy that's able to beat the market for like 50, 60 years. So, anyway, I hope that's enough food for thought for you guys to think about your investment strategy and how to become rich, basically, right? How to accumulate wealth and what the best pathway is for that. Personally, it's really hard for me to swallow the fact that I'm not going to beat the market. And so I'm always going to try to outdo it, try to get an edge somewhere, like I expect probably most of you will as well. So, I'm doing options trading, long term, short term, trying to manage money, swimming between leverage and non-leverage. I'm learning and I'm trying to be, but it's very unrealistic to think that me or me is going to be the next Warren Buffett, right? We're going to find our own path of maneuvering through the markets and beating it over a long period of time. But still the dream, right? That's still the dream. So, all right, that's about it. Enough rambling. A little bit up on the day. Hopefully tomorrow brings more riches to the account. I think that's about it. Peace out.